Good to have you here in this session. We will be focusing on seeing how to scale actually resilience finance and how to overcome certain barriers when addressing resilience finance. My name is Christoph Jungfleisch. I'm CEO and founder of Yapu Solutions. And today with me is Ms. Tina Livingston, Chief Operating Officer of COK Sodality from Jamaica. And thank you for being with us, Tina. I'm really looking forward to this session, and I think it will help everybody of the participants. We have heard in the first session a lot of concepts, a lot of macro views on what the Race to Resilience wants to do, what the Scale for Resilience is doing, what the angle from investors is. And now in this session, I'm very, very happy that we can have a look at, well, how does it look for financial institutions on the ground, working with the topic of resilience, adaptation investments, but also topics like energy resilience. And yeah, this is where we are happy to have Tina from COK Sodality with us. I will do a very brief introduction to give you an orientation how we have worked. With the financing from IDB or co-financing from IDB Lab, we have been working as Yapu under the principles we are promoting under the Scale for Resilience with COK Sodality and introducing a climate risk management system integrated with the loan origination system of COK Sodality, and COK Sodality launched with other support also a solar home loan. But more details afterwards. I will briefly share my screen and give at least an introduction on how we are approaching our path to resilience in order to work with financial institutions to get to proactive resilience finance for the most vulnerable specifically. So we have this graduation model in 7 stages, and you see 3 main dimensions on the left side. This is the most common situation in most of the financial institutions. I would even say globally. Usually we do not understand what the climate risks and nature risks are. So we only react once they have materialized. So typically this is when a specific borrower is in arrears. Then we react and we figure, okay, there was a flood which damaged the home. There was a drought which affected the productivity. So for us, in the first dimension, we start to identify and measure the risks. So the disclosure, first creating the internal structures and then starting to disclose climate-related and also nature-related financial risks. But this is only the basis to get to a more proactive approach to the promotion of resilience finance, where we not only look at having specific reaction mechanisms in place, but also to align up to the point to align with the national climate change strategies and international initiatives. Quickly, so this is, you have typically no understanding, you cannot disclose the risks, you cannot promote specific reactions to climate risks. So adaptation is always context specific and it is threat specific. It doesn't make sense that I have an adaptation measure applied which attends, for example, the drought if my biggest threat I'm facing is flooding. So we can only react. In this first stage, the disclosure dimension, we have 3 stages. We introduce environmental and social management systems, which help us to create certain structures, certain reporting structures to manage internal processes, orienting them towards a better identification and measurement of environmental and social risks. In the second stage, we focus on the gross climate risks. It's still very easy to introduce. We just need the exposure via GPS location, and we need the sensitivity according to the asset or the activity, and we can get an idea of what the actual risk a borrower is facing might be. In the third stage, we look at the net climate risk, physical climate risk, first of all, where we look at, okay, we have the gross climate risk, exposure and sensitivity, and now we deduct basically anything we have done around adaptation, which reduces these risks because the client or the borrower has invested in their resilience, in their adaptive capacity. And then we get basically to the third dimension of promotion. Stage 4 is focusing on, okay, we need quick reactions. So we introduce business contingency and continuity plans within the financial institution. We are aware of a climate threat. What do we do now? We know that our customers, our members, our borrowers are affected. So how can we react swiftly? Stage 5 is really promoting specific loan products based on a better understanding from the previous stages and financing proactively. Stage 6 is really getting to a recommendation system. This is quite complex. You don't want to recommend solutions which are not really proven. You don't want to misguide also your borrowers or your members or your customers. So you need much more data, which is coming from the previous stages. And in the end, of course, we want to align with anything which is happening by other stakeholders in the same context we are working with. With COK Sodality, I think they are solidly getting to a stage 5. So this is more Miss Tina's session. So I will hand over to you, stop sharing and leaving you the ground. And we are eager to see how you have dealt with it. And thank you for being with us. Miss Tina, the floor is yours.
All right, thank you so much, Christoph, and good morning to everyone. But it's morning here in Jamaica, but want to bring greetings to you wherever you are. All right, just to tell you a little bit about what we have been doing here at COK and how we are coming up with green financing loans to assist our members to become resilient. We have been working on a project with the IDB since 2019, and I will share what we have done in that project over that period of time as I go through the presentation. But just to give you some background information on COK Sodality. So we are a credit union. We were established in 1967. So we're over 55 years old and we're located in Jamaica. Our membership base is...
Miss Tina,
yes, you're hearing me?
I think you're not sharing.
You're not seeing, okay.
No, I'm not seeing it.
Are you seeing it now?
Yes, now it's coming.
Okay.
Thank you.
Okay.
Okay.
All right. So as I was saying, we are a credit union established in 1967, and we're located in Jamaica. Our membership base is quite large. We have over 275,000 members, and so we are one of the largest credit unions in the English-speaking Caribbean. We operate from 5 branches across Jamaica, and we employ approximately 220 employees. And we provide financial services, including savings, retirement scheme, and loans. Our loan portfolio is over $9 billion, and about 0.48% of that portfolio represent green loans that we have provided for renewable energy in the form of solar systems and to purchase energy efficiency products. So just to give you a background. As I mentioned earlier, in 2018, we bid and we won the opportunity to receive technical assistance from the IDB, who are our approved consultants with funding from Global Affairs Canada. And that project was started in 2019. At the time when we won the opportunity to carry out this project, it was the 18th such eco-micro project and the second in Jamaica and the third that was being funded by Global Affairs Canada. for MSMEs and low-income households. So the project really aimed at providing COK, the team here at COK, with the knowledge of how to finance renewable energy and energy efficient technologies for MSMEs and low-income households. In terms of our project, we focused on facilitating green finance as a means to increase access to renewable energy products and to assist in the adaptation to climate change while increasing the resilience of our members and the wider Jamaican population. As I had mentioned earlier, the project commenced in 2019 and our official closeout date was February 28, 2023 this year. The products that we launched as part of our pilot was to finance solar panel systems for residential and micro, small, and medium enterprises. And when we started out, we were also focusing on LPG, but we had to pivot away from that early in the project because the take-up of the target group, which was like taxi drivers and so on, the take-up wasn't good any at all. There was very low interest in that product because we believe it needed a governmental push. And so we had to pivot away from that early on. And we introduced at that point, providing unsecured loans for low and middle income households to purchase energy efficient products to become more resilient against climate threats. So these are the products that we have, the green financing products that we have in the market for our members and the wider population at this point. In coming up with those products and getting those products at market, we had to do a lot of work in terms of the collateral that we would accept for these loans. So for example, the solar panel system, we have 3 dimensions of how we do that type of loan. So the members or individuals wanting to access financing for solar panel system, so they can reduce their utility bill, they can reduce their carbon emission and all of that. We had to look at what forms of collateral we would accept. So we said we would accept your property, residential property, as long as there was equity in the property. For the MSMEs, we would accept the 80% DBG. So the Development Bank of Jamaica, they provide a guarantee, a partial guarantee of 80%. And for the business customers, they could use this to secure the loan, and that was pretty good. And then the third area, the third collateral that we had to work on extensively was accepting the solar panel system itself as collateral. And we had to do a lot of work with our solar providers. We had to form partnerships with providers. We had to bring in consultants. We had to work with the insurance companies in terms of how we would accept the solar panel systems as security and what it is that we would need to do at the onset, and in the event that the loan goes bad, what sort of actions would be needed at that point in time. And so we did a lot of work there in terms of the products that we brought to market in relation to the solar panel system. The solar energy bundle, which is the unsecured loan that we're lending up to $500,000 for persons wanting to invest in energy efficient or renewable energy products, that is there unsecured for members to access. And that has been the greatest take up throughout our project as we speak, that side of it. Now, just to give you a little bit more information on our disbursements to date. So when the project started, the target was much higher than this, but then came COVID and all of those disruptions that impacted lending. So credit supply really, credit demand actually went down during that period. And so the IDB had revised our targets for us, given what was happening during the time we were doing the project, mostly influenced by COVID. So the target in terms of volume was reduced to 60 loans, and we were supposed to disburse US $325,000. That equates to about 48.7 million Jamaican dollars. We were able to exceed the volume target as at now. So we disbursed 67, which is 112% of target. And in terms of the dollar amount, we have disbursed US 291.3 thousand, which is J8 43.7 million. So we achieved 90% of the target. In terms of our portfolio in relation to the green finance product, it is at 0.48%, and we intend, even though the project has ended, we intend to carry on with these products and to add more products that we will be financing to our portfolio. So within the next couple of years, next 2 to 3 years, we plan, or our goal is to increase this 0.48% to at least 5% of our portfolio, representing green financing investment or products that we offer. A highlight of our project is that just recently in April, we won an award at the 15th Annual Caribbean Renewable Energy Forum for Best Energy Efficient Project. We had to submit what we have been doing throughout the period with the project I mentioned earlier, and they found it very, very impressive. The things that we would have done regarding this project in terms of the products that we have brought to market, the green investment products we would have brought to market, the different pivots that we would have made throughout the project to ensure that the project was successful, and also the shift that we have made in terms of climate risk management and integrating that into our operations here at COK. And so for that, we won that award in April. Now, in terms of the milestones of the project, we had to design and implement the green finance products, and there were many activities surrounding each component. We had to analyze the vulnerability of COK's loan portfolio to climate change. We had to reduce the environmental impact on the financial institution, which is our own institutional greening. And I would want to mention here that, you know, we also lead from the front and by example, and we invested over $17 million in retrofitting our buildings with solar panels and so on. And we have already received our return on investment. So far, we have saved over $24.7 million in terms of that initiative, and our CO2 emission has reduced significantly. So we see that happening for us as an institution, and even our members who we have granted these loans to, who have retrofitted their properties with solar, they have come in and they have, you know, shared with us what has been happening with them in terms of their utility bills going down from $50,000 to just $6,000 or under $5,000 per month. So we see the impact that this is having out there in terms of the financing that we are doing and how it is helping our members. The other component had to do with knowledge management and communication. I have highlighted component 2, analyzing the vulnerability of COK's loan portfolio to climate change. And this is where we have worked extensively with YAPO in terms of our climate risk management framework, and also integrating the climate risk assessment tool provided by YAPO with our loan origination system. And I'll speak a little bit more on component 2. So in terms of component 2, when we started out, initially, the climate risk assessment tool that we were exposed to only covered one parish, which was St. James. And at that point, we didn't feel it could have done enough for us to help us to look at the vulnerabilities within our loan portfolio, or even to assist our members in terms of where their properties or where their businesses are located in terms of mitigating against these climate threats and utilizing our green financing options to assist them. And so we went back to the IDB to say we didn't believe it was sufficient. And as usual, the IDB, being so supportive, agreed with us. And we went back in discussions with Yapu, Christoph in particular, and we decided that eventually information or data became available that could cover the entire island. And we have worked with Yapu to implement that tool. But one of the things I want to mention that has happened throughout this process with Yapu and the IDB is that COK has, in terms of introducing climate risks to COK, we now have a climate risk policy. And this policy was approved by our board of directors. So we are getting buy-in and support at the highest level in terms of climate risk management. The policy outlines the roles and responsibilities of the COK management and board in climate risk management, documentation and reporting, identifying transition climate risks, measuring physical climate risk management in our loan of evaluation and portfolio monitoring. So this is where the tool comes in, where we're able to assess where a member's property, and we're using it mostly for businesses and also for homeowners who want to put up their properties for the solar, for example, as security, or if they're even taking a mortgage from us, we can use this tool to help them to determine what are the exposures, what are the threats within the area that your business or your home is located, and we can offer solutions to them in terms of what it is that they can do to mitigate against these threats and risks. And overall, we can also monitor our portfolio as well, and it will help us also to have better assets being held in our portfolio, because we will know the climate threats associated with those collaterals that we hold as assets in our portfolio. And also the policy looks at business continuity and contingency plan, and it lays out that framework for us in terms of what it is that we need to have in place. We need to have a climate risk committee in place. We need to have climate experts. We need to have reporting periods. We need to publish whatever we're doing in our annual report. So the policy outlines all of that in terms of what we need to do in terms of climate risk management. And then this is another exciting area of our project. And this is certainly a pivot that took place in our project, where we integrated the Yapu climate risk assessment tool with our loan origination system. And so you see where we're merging technology with our operations and our business line as well. So the tool looks at the vulnerability risk assessment of individual members and COK's loan portfolio to determine the net climate risk. And the results, we use the results to assist our members in recommending solutions that will increase their adaptive capacity through resilience financing, in particular in the areas of mortgages, home equity, and business loans. So we're using the tool to help our members and the general population in terms of having a better appreciation of the threats that they face with their own assets and what it is that they can do to mitigate against these threats, because the threats are there, they are not going away, but what can you do to become more resilient? And this is what the tool helps us to do as a financial institution. So just to give you an example of what it looks like. So this is the report that we would get from the climate risk assessment tool, and it would show the score, the climate risk score. It shows the vulnerability score, so it is looking at the different dimensions of climate risk here: drought, flooding, storm, not so much frost for Jamaica, heat. And it will tell us the client exposure, the client sensitivity, the adaptive capacity, and the net climate risk. And we determine these scores from the different questions that we ask the members and so on. And also the tool, once you put in the member's address in terms of where the property or the business is located, the geolocation comes up and it tells you the different threats that are within that area, and also based on the questions that are a part of the tool, which you will see on the right here, it informs the scores that are given, and so we know which areas we would need to assist the members on. So just like how you have a credit score when you're doing a loan, we now also have a climate risk score. We're not using the climate risk score at this point to deny loan applications unless, when we look at the threats, it is really, really bad for us to take on this asset as collateral. But for the most part, what we're using the tool to do is to help our members to make better decisions in terms of what it is that they can do. So for example, let's say they're impacted by drought. We would recommend to them, well, based on where your property or your business is located, your farm, whatever, you need to invest. You're affected by drought, you need to invest in maybe a solar water pump or something of that nature. So we are recommending, we might recommend that you might need to take out additional insurance because of what is happening in that area. So we're using the tool at this point to help our members to become more resilient and to become more aware of the threats that they face in terms of their business, in terms of their homes, and all of that. So that is where we are in terms of this tool, and we are very excited about it. We have been doing training with Christoph so that more of our team members can better understand it and have a better appreciation of it, so that in their discussions with the members, whatever we are expecting to happen in terms of advising and guiding the member, that can be done based on how we have envisioned it. In terms of, one second, are you still seeing my screen, Christoph?
Yes, we can see it. You just switched you skipped the last slide.
Okay.
You had, yes, there we are.
So you might ask, what is COK's resilience finance expectation going forward? And I'll just share a few with you. So through our green financing, the credit union, COK, we expect to have more resilient members, and by extension, the population, as we use our climate risk management framework and the tool that we have implemented to assist our members in this regard. We expect that the credit union's loan portfolio will consist of more enhanced assets that are more resilient to climate risk. So when we're taking on a property as collateral or anything of that nature, we are granting a loan, we will know that the asset that has been put forward is more resilient to climate risk. We are expecting to increase our green financing solutions. Right now we have the energy bundle, which is the unsecured loan for energy efficiency products, and we have the solar panel system loans. We're planning on increasing those sort of solutions over time that we offer to our members in an effort, again, to enhance their resilience, because we are, as a credit union, we strive to ensure that there is continuous improvement for our members and the wider society. So everything that we do is in that vein. We want to significantly grow the loan portfolio concentration in green financing to over 5% in the next 2 to 3 years. And I had mentioned that earlier on in the presentation. And we want to continue to provide awareness seminars that will provide information to the Jamaican population on climate risk and the mitigations that can be implemented through resilience financing. So those are our expectations that we have in terms of resilience financing at this point, Christoph. And that's just a brief presentation of what it is that we have been doing to date.
No, excellent. Thank you very much. And a disclaimer just for the start, we have quite a couple of questions in the Q&A section. So I will present them, and we'll present them to you because they're all to you. And we will keep it on from there. Maybe just from my end, also a brief comment. We are working, of course, we are working with the technology platform, and we are providing the capacity building services alongside of it. And as you can imagine, I think we have worked with over 60 institutions in our history. And sometimes you suffer and sometimes you have a very good time. And definitely for me personally, it was a great pleasure to work with COK. And just for the dedication of the management to and the capacity of the team to take this challenge up. So, and I'm not even talking about in our own implementation, but I think how you did the pivot with the product gives you the right basis, at least from my standpoint, to promote much more products in the same way. So provider networks, working with the insurance companies, basically creating the ecosystem. And this is what we are also targeting, I think, for the resilience finance. So thank you very much for this introduction. And now I will present you a couple of questions which were coming from the audience. Yeah. So Sylvia asked, the examples presented by COK demonstrate that mitigation and adaptation outcomes often overlap. How do you at COK and your investors measure adaptation and resilience impact? Do you want to answer that? I can assist where you want me to step in.
Or you could start, Christoph, and I'll come in.
Okay, yeah. So I think what we have or what Ms. Tina presented in terms of measuring first what the net physical climate risk is. I think what we discussed also with the team, with the risk experts at COK and with the product experts is it is the introduction of climate risk management is of gradual nature. It's not that we start today and we are at 100%. It will always be a learning. We don't have the data. We can bring in historical climate risk data. We can define based on scientific principles what sensitivities of specific assets and activities are. And we can, of course, score a priori what the adaptive capacity might be. But it is a learning process. So this is something which we are kicking off. So I think the first measurement for as we are just implementing it. No, so this is very fresh. We started beginning of the year, end of last year, and we have just finished the project. So now the learning phase begins, yeah, to understand better on a daily basis. So I think in the first step, the measurement is based on this net climate risk score. I think, and this is where maybe Tina, you can say much more. The strategy from what I see, and this is more on the COK level and on the COK management level, is well, getting into the promotion of concrete adaptation solutions, and then the impact will, of course, in the future be measured by losses avoided or increase in revenues if you have climate service dependent activities. But I think the impact in the future will be how much can we finance solutions that actually and proven enhance the resilience of the borrowers. I don't know, maybe.
Okay, yes, Christoph, that is what we envision in terms of what we're doing. So we're looking at, having this tool help us to look at what we're financing, if it makes sense for us, if it is something that is needed by the population in terms of enhancing resilience. We also have to look at how will this bring certain revenue to the credit union as well, as you mentioned. And so we will be looking at solutions, first and foremost, that will help our members to become resilient. But also we have to look at it from a business perspective, where we're looking at how does this benefit COK? We also have to look at the losses, as you mentioned, try to avoid any possible losses. And so even when I mention using the solar panel system as collateral, so persons who don't have any collateral would be able to invest in such finance, in such solutions. We had to do extensive work and research just to make sure that this risk that we were assuming would benefit us and not in the long run harm our portfolio in terms of if the loans go bad, what will happen at that point, and just to make sure that everything is being done according to code and all of those things being in place. So yes, we do look at that. I think the question also asked about the examples presented by COK demonstrates that mitigation and adaptation outcomes often overlap. How do you COK and your investors measure adaptation and resilience? So we measure adaptation in terms of, you know, what are the threats out there and what it is that you can do. What type of solutions, what type of infrastructure you can invest in to ensure that you enhance your adaptive capacity. So we're doing that. The investors are looking at that right now, not where we would want it to be, because this is pretty new to everybody, even the Jamaican society, but they're also looking at that. And then now, in terms of the resilience impact, which is, you know, tied in with the mitigation and so on, we are strengthening awareness so persons understand what this means for them, you know, in terms of investing in certain solutions and so on. I don't know if that answers the question for Silvio, but that's the best I can answer it at this point. All right.
Yeah, maybe just a brief comment. So there, how we have been setting it up is basically together we defined a taxonomy of climate solutions which are applicable in the Jamaican context. So out of a global long list, we have defined basically a Jamaican COK specific shortlist. And this is which is being checked basically and helps to understand what in terms of climate solution is available. And then of course can inform climate change strategies at the national level, inform other stakeholders, inform also the development of respective markets. So I think this is how good we can answer it for now, no? At least also from my end. But maybe you mentioned the solar panels and providing also access for those that might not have sufficient collateral. And this is the next question. How does the guarantee actually work from the DBJ? Is it a guarantee from the investment by the individual or business, meaning that the solar system, if the solar system fails and breaks, they pay 80% of the repair or replacement? I understood it's probably covering the difference between the residual value of the system and the outstanding loan amount, but
okay. All right, so the Development Bank of Jamaica, they have 80% guarantee. So what it does is that if you don't have, because we're lending these loans, and for the panel system, these are much larger loans than the energy bundles. So some persons do not have collateral to collateralize the loans. And so we said we'd use the panel systems. What the DBJ does for businesses, so you'd have to be a business member, you'd have to have a business. So that would be the MSME sector. If it is that they do not have any form of collateral, the DBJ will provide 80%. So if the solar panel system is for $3 million Jamaican, they will provide a corporate guarantee. They will provide a credit enhancement guarantee of 80% of that. And so the members would only put in 20% in their account here as COK to cover the financing of the loan. So they're actually guaranteeing the loan. So in the event that the loan becomes delinquent, they will repay us 80% of that. It comes at a small fee that the member has to pay each month, but it is not anything exorbitant that you cannot afford to do. And so what it is doing, it is allowing persons out there, because a lot of the business owners, they have their business, but sometimes they don't own that business, they don't own a property, so they don't have any collateral. And this is where the DBJ step would have come in to offer some form of assistance to persons like these. So I know they do it for business purposes. And so when we started to do the solar loans, we approached them to say, if business clients want to access a loan for solar, would you consider the 80% guarantee for them for this purpose? And they said yes. And so that is how it works. It is acting as collateral for the loan, and we can draw down on it in the event of default, as long as the member would have made the first 6 months payment before they become delinquent. Then we can draw down on that. Mm-hmm.
Maybe just a short question, sorry, out of interest. Do the providers provide warranties? Because this is, of course, if the system fails, it might lead to
yes, they do.
not paying. Okay.
They do provide warranty, and that is why we not only have providers like that, they have signed agreements with us. So we have partnered with over 10 solar providers, and they also provide other energy efficient products as well. And they provide warranty on these equipment. They also assist us in the event of default, in terms of if we have to retrieve the panels or anything like that. We don't want to do that, but we're in the business of lending, and sometimes that will happen. They will assist us as well in that regard. So they do provide warranty. There are certifications that must happen before we will disburse to make sure everything has been installed up to code and all of that. And that is why we had to do extensive work with consultants, providers, insurance companies, just to make sure that we were covering all the possible risks that could be involved in using the panel systems as collateral.
Excellent. Perfect. And now we're getting to some more philosophical questions, I would say, but very central. So of course, as soon as you start measuring risks, and specifically maybe risks outside of the traditional compound of risks, so we're getting into climate risk, and it might show that some customers are riskier than others. And do you see that there's a potential that you start excluding certain borrowers, certain members, because you suddenly make potential risks obvious and transparent, and you say, well, we financed them in the past, but now we will not serve them anymore. What is your take on that?
Oh, well, in loans, when you do credit, you're always going to be faced with, things happening regarding different industries, different cohort of your portfolio, and you have to do that assessment to determine, do I continue with this product line offering, or do I pull back on it? So in our general operations, we do that. But in terms of what we are doing here in terms of the green financing products, we have not seen anything like that yet. It's early days, but we have not seen anything like that. The two products that we are financing, we're seeing persons gradually moving toward taking up those sort of investment. It still needs more education and awareness building, so persons become more comfortable, but you do see a slight shift in terms of persons wanting that. In terms of LPG though, when we had started out, because that was one of the first products we had with the solar systems, we only did 2 of those loans, and we did massive awareness campaigns, webinars, all of these things. Persons were just not interested in it. So based on that, we had to shift away from it. So we had to discontinue that sort of financing because it wasn't going anywhere, because we believe that our push as a credit union was not enough. It needed that larger push, governmental push, for that to actually take off. So we have to make those sorts of decisions as we go along. And that is the one that comes to mind throughout this project, where we had to discontinue that project based on what we were seeing, that product based on what we were seeing.
Yeah, perfect. And maybe I would like to comment on this question. We start measuring climate risks, suddenly get aware of risks which we might not have considered before. and there might be the threat that we exclude customers, and especially the most vulnerable ones. No, so it might be counter-effective what we are actually wanting to reach. I think this is at least from what we're trying to do in the Scale for Resilience is really like focusing. Okay. Not only looking at the risks, at the gross climate risk, but looking at the answers to, at the adaptive capacity. Mm-hmm. So where are the opportunities? Where are the options in order to counterbalance these risks? And then, of course, financing solutions which help to increase the adaptive capacity. And this is, and maybe this will be probably now the last question, but let's look at the next question. What would you, Tina, say that are the main challenges for you to provide financial services for climate adaptation? Like the examples you presented, but possibly also to innovate on new products. What would you need to serve more customers and to address more climate risks? So exactly the look or the roadmap for new product development. How do you see that?
Well, we're excited about new product development based on what, so right now we have solar, we have the unsecured loans that we provide for the renewable energy and energy efficient products. But one of the things I can tell you is that with the introduction of the climate risk tool and having a better understanding of the threats and the adaptive, what is out there, what is it that you can assist members in terms of implementing or buying to reduce the exposure, we find that from that, there are so many opportunities in terms of what it is that we can actually finance. So we are seeing where we can add a myriad of other loan types to our books to finance, rainwater harvesting, to finance, things of that nature. So we're seeing, so coming out of, and Christoph spoke about it earlier, based on the different, I think you call it taxonomies, Christoph, that are out there. When you look at it from just that alone, you see where you can introduce to your portfolio so many financing options for your members based on where they're actually located in the island and the threats that they do face. So we can tailor so much more loans for them out there that will help with what the Scale for Resilience is trying to do to bring about resilience. So the opportunities that we are seeing right now and that we are discussing in our product development committee meetings regarding green financing is very extensive at this point. And all of that has come about because we have now a better understanding of how we can mitigate against these threats. And through the mitigation of the threats, we can come up with financing options for our members and greater opportunities for the organization and the persons that we serve as well.
Excellent. Maybe we take that. There's a last question, which I think is very early to really be answered. The question is if there are observable differences in expression of climate risks between men and women. And then, of course, you might get into the situation where the climate risks are higher for women, the net climate risk, and you might disproportionately discriminate women. So I think it is very early, but you might correct me, Ms. Tina, if you see it differently.
But one of the things if I could come in here, yes. Crystal, one of the things we have to monitor under the project that we had with the renewable energy project that we have been working on for over the years. One of the things that we monitor in terms of our disbursements and the take up of our green financing loans is the take up between male and female. And what I've told you, we have done 67 loans, and out of that, majority have been females who are taking up these loans. I think when I looked at it yesterday, 48 out of the 67 would have been females, and then the difference would have been males. So we see more females taking up these loans. We also offer a 1% reduction in the interest rate to female borrowers. And that is a part of the project that we would have been working on, because we believe that the females are the ones who will drive, you know, will drive, what is happening in terms of the race
transition.
resilience and
Yes.
transitioning, you know, to energy efficient products and so on. So we do see that there is an imbalance in terms of the take-up, and women are leading the charge at this point with the data that I have in terms of accessing financing.
Well, excellent. That is such a positive message, and also nice product design approach to the end. I couldn't have imagined a better ending for this session. Thank you very much, Tina. It was not only a pleasure to work with you over the last couple of months, but it was a great pleasure to have you here on this session. And thank the audience for all the great questions, and looking forward to successful cooperation in the framework of the Scale for Resilience.
Yes, and thank you too, Christoph. You have been, you know, such a wealth of knowledge for us here at COK in terms of the implementation of the tool, in terms of our climate risk framework build out, and in terms of training. It's as if you're a part of this COK family. And if you just allow me, because the project is closing, I just want to recognize some of the stakeholders, for example, the IDB, who has been with us all this time, and whenever we go to them with any recommendations to pivot because of challenges throughout the project, I can tell you they have always been supportive. And also Global Affairs Canada, because without their funding, the milestones that we had to achieve would not have been possible in terms of the payment. And lastly, to the COK board, management and staff and members who rallied behind this effort and are becoming even more excited about what we're doing as it relates to climate change, climate risk management, and all of that. So I just want to thank the team members and thank all the different stakeholders, including yourself and Technosoft, who you worked with regarding the implementation.
Thank you so much. That is much appreciated, and I can give everything back. So thanks a lot for this session. We will close. I think as soon as we close, you are back into the lobby for the audience, and you can join then again the next session. I think it's Davide and other colleagues will be presenting the next parts. Thanks a lot, Messina. Have a great weekend, which is starting today, and thanks to everybody else. Thank you.
Thank you too.